Hi, I'm Nicola Lambo, and my husband and I read Mark Kwan's book, Top 25 Ways an IUL Can Secure Your Financial Future. And so far, I've loved what I've read. I just have quite a bit of questions just to solidify the concept and thought process in my mind. And I've got Mark Kwan here. Why don't you tell the folks who you are?
All right. My name is Mark Kwan. I've been in the financial services and insurance industry for about 20 years. I've trained hundreds of life insurance and financial advisors over the years. And I've written 3 books. One is about the banking industry. The second is called Top 10 Ways to Avoid Taxes. And the third is an entire book on life insurance. So I think I know pretty much everything you could possibly want to know about on life insurance.
Yes,
So.
and he's an Amazon bestseller, so there you go. Definitely qualified. So as you know, there's so much information out there, and I know that you are really good at taking complicated things and simplifying them. And I do have some questions about the IUL.
Okay, shoot.
Okay, so most people haven't heard about the IUL. Is this something that's new?
No, an IUL is actually not new at all. It was created in 1997, so it's been around for more than 25 years. I had heard of IULs in 2006, is the first time that I had heard of them. At the time, we were selling what's called variable universal life, where you put mutual funds inside a life insurance wrapper, and they grew without taxes. So when they came to us and said, "No, it grows, but it can't lose money," I was a little bit skeptical. I was like, "Well, you can't do that." But
It
again,
definitely sounds too good to be true.
they've been around for over 25 years, and they're actually getting better. Now you have no risk, no cap to the earnings, and of course, no taxes.
So how much money can I actually put into an IUL? What determines that factor?
Okay, there's no limitation to the amount. You have to tell me how you want to customize yours. If somebody said they wanted to fund $30,000 a year into an IUL, we would basically give them a certain size policy. If you came to me and said, "Mark, I want to put $1 million a year into an IUL," we just have to make the policy larger. So it just depends on the bigger the policy, the more money you can shelter inside an IUL.
Yeah, it sounds
Yeah.
very personalized, very flexible.
Yep.
So that being said, adversely, how much money can you take out of the IUL? What's the parameters there?
They're super flexible. It depends. A lot of IULs. It also depends on the company.
Oh, right.
Have
Okay.
a lot of liquidity or the ability to borrow on month number 13. So you could fund it a little bit in the first year and heavy in month number 13 and borrow against 70 to 80% of the cash value. So it just depends on the policy, and then just really designing it towards your goals, because my clients always tell me, "Well, this is what I want to do with this," and then they
Right.
just design it based on when they can borrow and that sort of thing.
Now, as we said, too good to be true.
Okay.
So how does an IUL not lose money?
Okay, it's pretty simple actually. Rich people used to invest where they put the money in bonds, and the money wasn't in the market, and they would take some interest from the bonds and they would purchase what's called a stock option, let's say on the S&P 500, and it would make money if the stock market went up. Okay, so in IUL, the money's never in the market. They do the same thing. They put it in bonds. They'll purchase stock options.
Right.
The stock options rise in value. They can sell them at the end of the year and purchase the bonds, and it steps up. Okay. Now, if the market lost money, the money's in bonds. Options expire worthless, but all the money's still in bonds. So you can't lose money. It steps up once a year, and again, you cannot lose money, and we can't say that often in the
Right.
financial or investment industry.
Okay, so let me see if I have this right. So
Okay.
you have the bonds, you have
Yep.
the stock options. If the stock options go away, you still have the bonds.
Right.
So you can't lose money.
Correct.
Wow.
Goes up, goes down.
Yeah.
Can't lose money.
Wow. So does it matter what company I buy the IUL from?
That is very, very important. Just because there's a lot of IULs in the market, and for instance, only 4 have real long-term care insurance. So if you're needing long-term care insurance, you want to get that inexpensive in a policy, you got to make sure there's a company that includes real long-term care insurance.
Okay.
Other companies, there's a thing called an alternative loan, and that's where you have all the cash value in there, and you take a loan, but it leaves all the cash value to continue growing in the policy. Okay, so that's really important, and I hate to say it, but the number one selling IUL in the marketplace does not have alternative loans. So if you're liquidated, if you're taking the loan, they take the money and you remove the upside of the market at that time. So you really want to be careful which company you're using to purchase your IUL. I typically wouldn't purchase an IUL from a publicly traded company, or if their parent company was publicly traded, because they tend to have a little more money for the stockholders
Right.
in
Different
that
objective
policy.
than your own.
Different objective, exactly.
I
So
see, I
the answer
see.
is yes, it's very important to get it from the right insurance company, from the right agent, and customize it to your goals.
Yeah. Now, my last question, I wanted to ask you about, I've been seeing a lot of things online on YouTube about infinite banking. And there's a company that's recommending the whole life policy.
Okay.
Do you recommend the whole life policy?
I don't think they're bad policies, but if you're getting a 5% fixed rate of return on your money, you're not keeping up with inflation. And then with a whole life policy, you might be getting 5. When you go to take a loan, you're also paying 5% interest.
Right.
So you're not really. I'm not sure what's infinite about it. I'm still wondering.
Right.
But I mean, if somebody's super ultra conservative and they want to buy life insurance and get a 5% fixed, whole life is the place to be. But if you want upside of the market, these days you can have no risk, no cap, the ability to secure loans against it. You can really have a pretty incredible policy that has a lot of upside in the market, and you can't do that with whole life insurance. Okay, there's the whole life insurance also doesn't have long-term care.
Right.
So now you're going to have to buy it. You're going to have to buy the whole life and then go buy an IUL
Yeah.
to get the long-term care insurance.
Right. Thank
Yep.
you so much for your time.
Hey,
I feel much more educated on the whole thing.
No problem. It only took me 20 years to learn it, so I'm happy I could simplify the complicated for you.
Thank you so much, Mark.
Yeah.